Alright, so now we're going to move on to Section 2 video. And Section 2 video has to do with the setup and the control of petty cash. Petty cash is considered a little bit of an old-fashioned idea. Most companies today have something like a debit card or a credit card that they give to a trusted employee, and he or she will do the office purchasing that needs to be done in cash. But it is still used, and it's a good idea if you have a company that relies on spontaneous transactions, let's say. So you would use something that looks a bit like this receipt. I've got pulled up on the screen right here. You can get these in a book. You can buy them at the office supply store. This one's coming from Staples. And it's simply a description of what you're buying in the left-hand column over there. And then in the right-hand column, the amount of what you paid for it there and the total. And it will be signed by the trusted employee that we give to take care of the petty cash system. Alright, so now I'm going to flip back the screen. An example of the use of petty cash might be something like, it's Margaret's birthday and everyone forgot and showed up for work on Tuesday morning, and the boss pulls aside somebody and says, hey, why don't you run over to Publix and pick up a cake for Margaret and we'll share it at lunch. So you give out petty cash, or you take $20 and you run over to the Publix bakery and you buy an $18 cake and you come back. Well, that would be a use of immediate cash if you didn't have a company credit card or debit card. So to set up our journal, our petty cash fund, first we create a journal entry debiting petty cash and crediting cash, because we've literally gone to the bank, we've cashed a check, we've brought the green dollar bills back to the office, and we've put them in a box. The box has the receipt book in it for the petty cash transactions and a lock, and then it is assigned to one person in the office. She should have the lock, or he should have the lock, or the key to the lock, and no one else should have access to it. If it's a combination, no one else should have access to that as well, because they are literally on the hook for that amount in the petty cash fund. So we've set up our petty cash fund by going to the bank and wrote a check, and we just took out a little bit. We took out $75 this time. You can do this in whatever amount you think your company might need. You can always increase it if this turns out to be too much, or decrease it if it turns out to be too little. So now we've got our petty cash fund on November 1st. Top of 297 shows our journal entry. And all through November, we use this fund to pay for things that come up spontaneously. So the first receipt in the book is going to be some inventory cost, which was the freight charges or shipping for a box that was delivered. The delivery man came in and said, I need $15.05 because this was cash on delivery, which still happens occasionally. Then we send someone out to Walmart because we ran suddenly out of whatever. And this was 10 days later, and it was a $4.75 expense. So it's office supplies. We make a note of that on our little receipt for petty cash. We had another delivery charge because we shipped out a package to a customer that we had to go pay for at the post office. This was a $5 charge on the 18th. And then we didn't really know what to do about this, but we had the tile in the women's bathroom cleaned, so we put it down to miscellaneous, and we'll let the accountant figure out. You and I know in this class that we would call that cleaning expense if we had one, or maintenance and repairs. So that was $46.50. Now at the end of the month, we count up all the receipts, we add them up in the calculator, and we see that receipts show us that we should have spent $71.30. I started out with $75. I'm going to do two things at this point. I'm going to count the cash in the box to make sure the cash was handled properly. Hopefully everything's all right, and if it's not, we'll use our cash short and over account to fix it. And then secondly, I'm going to go to the general journal, and I'm going to make one journal entry for all of these transactions at the end of the month. So in the general journal, I would make those on the near end or close of the month to refund or refill the petty cash account back to where it was at $75. So the next journal entry on 297 is a debit to merchandise for the November 5th transaction, a debit to office supply expense, a debit to delivery expense, and a debit to miscellaneous, which we would have probably reclassified as repair and maintenance. And we're going to credit cash for $71.30. And the reason, or the statement of explanation on this one, is to reimburse petty cash. Notice I didn't use petty cash account in that journal entry. I just used the different accounts and cash because I've already created the fund. All I'm doing is filling the fund back up to what I call normal level. The next two journal entries show how to increase the cash or decrease the cash. We found out we spent almost all that money in November, so let's take it up to $100 for December. I'm just going to copy the creation journal, which is debit to petty cash, credit to cash, but add to it with another $25. If it's too much, if 75 didn't get spent or near 75 and I want to take it back down to maybe 55, I'm going to reverse the transaction. I'm going to debit cash to put the money back in the bank, credit petty cash, take the $20 out of the office and take it to the bank. That probably never really happens. If petty cash is short or is over, you treat it just like a drawer, like we learned in the previous section, by using the petty cash account, the miscellaneous expense, or the cash short and over, and then the cash account. So you can see that example on the top of 298. Okay, section 3, or the third thing that we're going to talk about then for the next chapter, is banking activities, or the bank account deposit and the bank reconciliation. Old-fashioned people still do their own personal bank reconciliation. This book wants you to understand and connect to do what a bank reconciliation is. I understand most people today don't. They don't even bother with checking to see if the bank made a mistake. But the banks do. Human people work at the bank. Human people put in those transaction amounts on a computer. They do it quickly because that's their job. I did that way back in the last century when I was 19. And those mistakes happen every day, more than we think, because the banks want to lead you to believe they don't make a mistake. But they do. So you need to learn how to check your bank statement, whether it comes monthly or you go online every day, and make sure that it agrees with what you believe the transaction should be. So if you keep your receipts, that is one real easy way to check, did they charge me what I actually intended to pay when I had a debit or credit transaction? And secondly, keep your pay stubs or your check stubs for your deposits to see did they actually deposit every penny that I thought I was putting into the bank. And that's what a reconciliation is. You reconcile what they said versus what you think or you said and see that the two agree. Sometimes they don't agree because checks haven't been cleared yet. They haven't had time to pass through your bank. It takes sometimes 5-7 days for a check to clear. Debits go a lot faster, 1 or 2 days. Banks like that. Sometimes there are things that you don't know about. The bank pays you interest, for instance, on your savings account, but you don't know that for a week. Or somebody has an automatic payment set up and their company gets paid at their bank, like the light bill company, the Colquitt EMC. You can actually go to your bank and your bank will set it up so that they pay automatically Colquitt. And when that happens, you might not know if it's already cleared or processed unless it's been going on for some time. So the bank might do things you don't know about, and then you have done things that haven't yet had time to go through or process at the bank. If you're a business and you make nightly transactions, which is usually something that happens in bigger retail stores like grocery stores, you make a nightly deposit after work or after business hours, then the bank might not have put it into your statement. The statement cut off. You think you put the money in there. The bank doesn't show that the money's received yet, so there's a difference in timing. So anyhow, we just have to get all that straight and figure out how we're going to process all those different things and make them balance up. Some things will require adjusting journal entries. Some things will not. So I'm going to stop this one here, and we're going to go into the screen and conduct a bank reconciliation.